Hey traders, Raghee here, and there is a season that we call the tail wags the dog in the futures room, and that is when the heavily weighted stocks within the indices, so in this case, let's take a look at the NASDAQ futures market, when the heavily weighted stocks within the indices have their earnings. Now, a really easy way to track earnings, and this is a free tool that I've been using for a really long time, is a site called Estimize. It's free. And it's a great way to understand the expectations, the historical moves in a name. And then conveniently, it gives you a great calendar and you can program in the stocks that you look at. All right. So this is something we use in the futures room. And why would futures traders be concerned by earnings? Why do we call this a tail wags the dog? Well, when these heavily weighted stocks, which are smaller than the futures contract that they're included within, but when these heavily weighted stocks hit their earnings, they make these big moves. And those big moves, when you think about the weighting, can disproportionately affect the broader average. So when stocks like Microsoft, Apple, Amazon, Facebook, Google, and the list keeps going, but really those heavily weighted names have earnings, we as futures traders have got to be aware of that and the effect that they can have on the average, on the futures contract and the ETF, by the way. So let's talk about two of them right now. You see you've got Apple right there, the 28th. You've got Microsoft right here. That was the 29th. Is the 29th. You've got Facebook, Amazon, right? So this keeps it really easy to keep track of. So let's take a look at two entries, three actually, that we took recently and set up in the room, where these are stocks that are heavily weighted. To me, they're almost like little pieces of the NAS that will trade alongside the NASDAQ. So when the S&P, Dow, and Russell pull back and the NASDAQ didn't just the other day, I didn't get a NASDAQ futures fill, but I did get a Facebook fill, and I did get a Microsoft fill, right? And what else can I look for when the futures contract doesn't pull back? I can look at those heavily weighted stocks. I can look at the heavily weighted sectors too, and those are things we do in the room a lot. So I don't want to get too far off topic, but just kind of conceptually think about what kind of opportunities that may give you as a futures trader and or a stock trader. All right, so let's take a look at Microsoft here. Now, we have a saying in the room, and this is pay yourself while you can, not when you have to. That is a Ragheeism that I've lived with my entire life. Pay yourself while you can, not when you have to. In other words, get on base as a baseball player. Hit that, get on base first, second, third. Don't get caught cheating a base. That's almost unforgivable, right? If you're going to go for it, rounding second, trying to get to third, and you get called out on third, how many times we watch it as a fan and go, oh, you just should have stayed at second, I don't want to do that in my trading. So we had some aggressive pullbacks. We had some not so aggressive pullbacks within our earnings window. We know as heavily weighted stocks may rally and also rally into their earnings dates, that's going to affect the underlying futures contract, S&P, Dow, NASDAQ. We have to be aware of this. Again, the tail wags the dog season. We had a pullback on that dramatic sell-off on the 27th, not in the NASDAQ, but definitely in Microsoft. And so this allows us to pick up some call options on the sell-off at the 34 EMA on the high and the 21 on the close. And as we move up and test the previous highs, we pay ourselves. What's another reason that I want to pay myself? Well, tomorrow we've got the earnings after the bell. Now, I'm sorry, not today we have the earnings tomorrow. Today we have the earnings after the bell, right? So you know what's happened. So when I look at the fact that I've got earnings and they're on the 29th, do I want to be sitting through earnings? I do not. This is like rounding second and trying to get to third, but possibly risking getting caught out, right? I don't want to ever push my luck. Now you might say, well, Rog, we could hit a home run. I'm not interested in home runs. I'm interested in buying this pullback here, taking my profit and knowing that, sure, the market may go up a little bit or a lot, or it could go down. Now, I'll give you the tale of two earnings. Here's Microsoft. I'm flat. I don't sit through the scratch off ticket of earnings. I've already made my money. I don't want to risk it. Now, I think Microsoft right now is trading up at, actually, let's go take a look. I think it's trading at 171 right now, if you take a look at it on the short-term time frame. So it's up a little bit. Okay. I don't feel like I've missed a whole heck of a lot. Facebook's another example. Same idea. Pull back. Almost looks identical to Microsoft, right? Pull back. And then what happened here again? Pay myself while I can, not when I have to. You see here, once again, after the bell today, and I want to be out before that point, not only because of the event, but also because I've hit my price target there just in front of 222.5. Whereas Facebook right now, it did ping 206. I think it's sitting at 210 right now. So see what I mean? It's a scratch off ticket. You could either have a great big win or you could give back a lot of unrealized profit and maybe even turn the trade into a loser. I don't want to sit through that. I don't want to take that chance. So sometimes I'm going to miss a big move. I'm totally fine with that because here's two examples where one was a winner, one wasn't. Now, what else could you do? And some of our traders do this, which is they'll take maybe half to even 3/4 of the position off the table, realize a gain on most of their position and leave a very, very small amount to see how high is high. So that way, as Facebook sells off, you're not giving back a lot of your unrealized profit. All you're really doing is giving back some house money to the house. And if and when you get a little bit more out of a stock like Microsoft, I think is sitting at 171 and change, great. You get a little bit something more out of it. But most of the time, I'll tell you again, I get out. So I hope this helps. This is just a piece of the way that we respect earnings as futures traders, heavily weighted stocks within the larger average. And so we're going to have an interesting push-pull tomorrow and even into the Asian session. Watch the NASDAQ digest Microsoft a little higher, but Facebook considerably lower. Facebook's going to have a bigger impact based on its move on the NAS. And you'll probably see a little bit of weakness in the NAS because of it. All right, so keep those things in mind, tail wagging the dog. And then in the premium video, gang, I'm going to jump into my 642 window of how we play these earnings. One, we have to respect them because they affect our futures trading. But I'll also talk about how we can get opportunistic on this using a 642 window. All right. Hope this helps. Remember, when you're trading futures indices, you really are trading stocks. So you want to, one, be respectful of what they can do to the average, and two, let's get opportunistic. All right. Thanks as always, gang, and I'll see you in the next update.